What's going on, guys? Except blood in the streets everywhere, panic selling, everything in the stock market's getting crashed. I mean, everything, right? You got your Tex that's been down, your hardy S&P 500 that's been down this year, NASDAQ, Dow, whatever. So what is a person to do? Flee into the streets and run wild? No. We're going to look for safety in the stock market. We're going to take a look at a really good ETF here today. Obviously from the title of the video you know what it is, but we'll take a deep dive into it and see how this can protect us and kind of hedge against this all these things that are going on here. So let's dive right in. But first, I'm not a tax, legal, financial person by any chance, so all this stuff is just what I'm doing and what might help you out, but don't take my advice as any advice. But don't take anything I'm saying as any type of advice, so just so you know. Anyways, let's dive right in. What we're talking about today is the Fidelity Consumer Staples Index ETF. Okay, what is this thing? What is this? Okay, so this fund, the fund's underlying index is the USA IMI Consumer Staples Index, which represents the performance of the consumer staples sector in the U.S. equity market. Okay, so consumer staples, stuff that's consumed, right? Stuff that's made, consumed, used, and gone, that kind of thing. Okay, so let's look at these. Let's look at these stocks that. Let's look at these companies in this particular ETF. All right, and then we'll get into the numbers later. But let's look at who we're talking about buying underneath it all. Right, quality companies. Now this is sometimes a defensive strategy, but also a good long-term strategy, because these are companies that you want to hold, that you can hold forever through tough times, good times, any times, right? So right now they're doing a lot better than the S&P 500, than the Dow and the NASDAQ, but we'll look at those numbers later. But check this out. All right, so the companies, Procter and Gamble is the biggest holding with 13%. Then you got Coca Cola, Costco, Pepsi, Walmart. These are the brands that are well positioned for inflation. A lot of people are going to save money. They're going to go to Costco, Walmart. They're going to they're still going to drink Cokes. You can't peel the Pepsi from some people's hands. Whatever. There's still people still going to smoke, right? I mean, these guys here. They're still, we all going to brush our teeth, right? And we all going to all the chicks are going to wear makeup. I mean, that's just the way it is, right? Ladies, I'm sorry. All the ladies be wearing makeup. Okay, my apologies. So good quality brands. The flight to safety is what you might hear it as being said right now, because it's been a tough year, starting 2022. We're sitting here and it's late April, fixing to be May, so half the year has been pretty tough on us, but we just keep plowing through, keep dollar cost averaging. But all that rah-rah stuff's for another day. Let's look at this one, because this is actually performing quite well. All right, let's look at this. So all the 104 holdings, you can look through this list. We see Estee Lauder, Colgate, Kroger, General Mills, Walgreens, Hershey, that's not the Walgreens, that's the Boots company. Keurig, Dr. Pepper. You have to pry a Dr. Pepper from my son's dead hand, so to speak, because he won't drink anything else. He's a Dr. Pepper guy. Tyson, Clorox, Kellogg's, right? Smuckers, Coors, right? People going to drink their beer. Campbell Soup. The list goes on and on. So the good, solid core foundational companies here. Okay. Now let's take a look at one of the biggest things that you need to pay attention when you're buying ETFs is the net expense ratio. So you'll see here, way low. Not even not even a 0.1%. It's just 0.084%, which is really good. Okay. So really good. You don't have to worry about too many expenses, right? We talked about the holdings. Okay, so all of it's 100% pretty much is in North America. Let's see here. Mostly it's giant companies and large companies with a little mixture of medium, small, and micro. Okay, and it's a large value style. Okay, currently. And here's the industry. So you got the food and staple retailing, you got the beverages, Coke, Pepsi, you got the food products, household products, tobacco, and personal products, makeup, and all that kind of stuff. Gross expense very low, net expense very low. The distribution yield, so you get, yeah, it's not a good dividend stock. I mean, 2% is okay, but mostly a safe haven. But you know, something's better than nothing, right? It's free money. You'll see the dividends that they've been paying, so been paying pretty good dividends. You'll see the month-end average total returns, so it's matching the market pretty good. So you'll see the net asset value returns, pretty good, really good, really good. So here's the important stuff here. Here's the important numbers. We've got a equity, we've got the PE of 24.79, which is not too bad. Price to book 4.88, price to sales 1.3. Net expense ratio really low, like we said. So performance year to date 2.76, but it's been a tough year. So if you compare, you're like, dude, come on, Johnny, that ain't nothing. What are you talking about? So if you compare that to the year performance of the S&P 500 tracked by SPY, you're down 10%, right? I mean, so that's, I'd rather be up 2.7 than down 10. How about you? Any day, right? So this 1 year is 14.83. 1 year is 4.6. So it's beating the 1 year, knocking the pants off the S&P 500. But it stabilizes out, as most things do. 3 year, 14.66. The S&P 500, 15. So in the long term, as we always do, dollar cost average, mostly the S&P 500. But here is an alternative for kind of a shorter term horizon if you're tired of getting beat up, you know. So if you're getting tired of, you know, getting beat up, you know, this year, which a lot of people are, here's an alternative to a ETF that's actually making you money. How about that? Instead of hearing everyone's like, oh, we're doomed, we're dead, you know, you can say, well, you know, we're not all doomed. We're still, you know, number one dollar cost averaging into the S&P 500 and types more of a consumer focused, consumer staple type of a ETF. So anyways, hopefully you guys like that. So hit that like button to get the message out. Value, safety, relatively, you know, so to speak. There's always risk in any investment, right? So do your own diligence. Thanks a lot for watching. Hit the subscribe button and share this with anyone who's interested in investing and improving their financial situation. So thanks a lot. Go to the website, hustlenation.org, and check out everything we got there. Sign up for the newsletter. Okay, you'll get some fascinating tips and tricks on how you can improve your finances. But really want to say thanks a lot. Really appreciate you guys. I wish you much success in your finances and in life. Peace out.